Thanks for joining us on Power Lunch. This is Bloomberg Quint and I'm Ira Dugal. Let's get you the headlines. Nifty and Sensex hover near the day's lows with broader markets underperforming the benchmarks. The 10-year bond yield falls to its lowest since 2017. The Bimal Jalan panel set up to review the RBI's economic capital framework may not recommend a large transfer of surplus reserves to the government. That's a Bloomberg Quint exclusive. Sun Pharma misses estimates in the fourth quarter as India business falters and the drug maker takes a one-time hit for its distribution business. The US refrains from labeling China as a currency manipulator, expands the watch list with 5 new additions, but India and Switzerland have been removed from the list. All right, let's first take a look at how markets are faring. Yatin Mota is here with us. Afternoon, Yatin.
Good afternoon, Ira. And if you look at the market at this point in time, we are 50 points down on the Nifty. More importantly, the advance decline ratio also on the Nifty 50 stocks is slightly weaker. One advance for every 2 declines. So the market breadth is slightly negative in trade today for the large cap end of the market. What's gaining in trade is the likes of Bharti Infratel, GAIL, TCS, HCL Technologies, Sun Pharma. So largely the beaten down sectors, IT and Pharma. Today we are looking at some bounce back. Sun Pharma and Dr. Reddy's are doing well as far as the pharma pack is concerned. On the flip side, we have Z, SBI and JSW Steel, which are losing by over 3% in trade right now. Each of them have seen some selling pressures, especially in the future and options segment. If you look at SBI also, we are looking at a 3% strong correction coming in as far as that PSU bank is concerned. In terms of active securities, we also have ICICI Bank. That private banker is down nearly 2.5-3% in trade. Idea Cellular, PNB, Reliance Power, Yes Bank, all of these stocks are struggling in trade. So clearly, not only the mid caps but also the large cap banks are looking at some sell-off which is happening in trade.
Yatin, thanks so much for that. That's the equity markets. In the bond markets, the 10-year benchmark bond yield has fallen further. At least this morning, it was trading close to the 712 mark, having now slipped for at least the last 5-6 trading days. A bunch of factors have made the difference in the bond markets. One of them is global. Global yields have been falling, but also equally, you have seen liquidity conditions turn a little bit better in India. Let's go across to Mr. K. Harihar for a perspective on the bond markets. He's Treasurer and Head of Global Markets at FirstRand Bank. Thanks so much, sir, for taking our call. So first, just that, what are the factors that are finally bringing down bond yields?
Hi. You alluded actually to one of the factors, which is that globally yields are clearly coming off, and I think that's been a consistent kind of point that's been putting downward pressure on the yields. Separately, the oil prices, which had gone up to that 72-74 handle, I think despite the fact that tensions continue to simmer between Saudi Arabia and Iran, you've seen the oil prices in the 70 and slightly lower level. That's been the second plus. But I think most importantly, I think there are increasing noises that the GDP growth rate could have slowed down. And on 31st, we'll see the actual number. But this current quarter, we're seeing a sharp slowdown, and that could actually bring the full year's GDP number to that 7% handle. That probably is leading to a lot of speculation that the RBI in the next credit policy coming up in June will definitely affect our policy rate cut. And I think that's been one factor which has been helping the bonds go up and continue to rally. Separately, you alluded to the fact that the government spending seems to have resumed, and therefore the liquidity deficit in the marketplace, which was about 50-60 thousand crores, has come down to about 20 thousand crores. And the final factor, the FPIs seem to have rediscovered their liking for the Indian debt market. After having sold in April, this month they have started buying in a small way, just under 2,000 crores of net purchases on the debt side. But I think the thing is it's turned positive. I think so overall it's a confluence of local factors and global factors which are playing into this whole thing. We finally, of course, have to watch out for the budget as it finally comes out. We've already seen the budget being presented. So long as there are no surprises and the 3.4% deficit holds, I think the rally will continue to have some more legs, though the pace of price going up will come off. Separately, of course, we'll track the monsoons. Hopefully, right now, the sense is that the monsoons are on schedule to arrive, and that 97-98% long-term average should be something comforting from a CPI angle.
Sure.
If there's any miss on the budget or on the monsoon side, then of course the bond yields can kind of find a support level and could look to go up. Otherwise, 7.15 handle, I think is for the time being a safe level.
Okay. Mr. Harihar, a couple of follow-ups on the local factors. Global, I assume we respond to what happens. But so is the expectation that we'll get another 25 basis point cut in June? Or is there an expectation that we will finally get something more on the liquidity side in terms of a stance on maintaining surplus liquidity? Although I believe by the end of, say, mid-June, end June, liquidity should in any case be in surplus, wouldn't it?
See, I think it's the expectations are all over the place. So earlier the expectation was a clean, simple 25 basis point cut. And since the budget wouldn't have been announced and since the monsoons wouldn't have arrived, a change in stance could probably be postponed to the next policy. Then after the governor suggested that why are we expecting rate cuts and in multiples of 25 basis point, there was also the feeling in the market that it could be a 15 followed by 10. And finally, now the expectations have swung to the other side that if the GDP for this quarter prints at, for the last quarter, that is, which is going to be announced on 31st May, comes to below 6, then would it be more than 25? So I think expectations are all over the place. But my personal sense is that 25 basis point cut and a change in stance, not now probably. Wait out to see whether the budget and the rainfall comes on time. The rainfall comes on time and the budget delivers as per the earlier forecast, and then probably you'll see that happening. To your last question, I think normally this is called the easy season and liquidity always is in surplus. This has been a very peculiar opening quarter of the fiscal where the liquidity has been deficit, partly linked to the fact that deposit growth rate has been very anemic in the banking system, whereas the credit growth rate has been quite powerful and the FPI activity in terms of inflows has been relatively quiet with the government spending on the back foot. So in all of these, I think we can hopefully expect that the government spending will pick up since the elections are over. I think that will be the one single factor which pumps liquidity into the marketplace. Then, of course, we'll have to see how the FPIs behave and that will be a liquidity accreting kind of thing. One final factor is that the OMOs have, the first OMO 15,000 crores has been greeted with a lot of happiness by the marketplace because otherwise the market was thinking that we'll have to rely only on FX swaps. Yeah. So OMOs coming back, even if in a small way, I think that will be something that the markets will like.
Okay, Mr. Harihar, last question. Is the relief mostly on government bonds right now? Has there been any narrowing of spreads on corporate bonds over and above government bonds at all?
Generally, on the corporate bonds, if you take a 2-year sector as an average, I think you would have seen yields come down by about 20-odd basis points. So it took a little bit of a lag, but corporate bond yields have come down. Having said that, there's a lot of pick and choose on the corporate bond market. The market's sense of comfort on some bonds is very high and sense of comfort on other bonds is not as high. So the ones which are very, very liquid, you would have clearly seen a drop of 15 to 20 basis points in terms of a 2-year, 3-year kind of benchmark. So that's a good thing in the market.
Thanks so much, Mr. Harihar. Appreciate you taking the time to explain how things are playing out in the bond markets. As he explained, a bunch of local and global factors coming together to bring yields down to 7.13. Will we take out 7.10 or will we go back to 7.15? Mr. Harihar believes that 7.15 is perhaps a more reasonable expectation. Let's move on. The government's hope of getting a large chunk of the RBI's existing reserves may not fructify. The 6-member panel headed by former Governor Bimal Jalan may recommend some tweaks in the economic capital framework, but that may not necessarily lead to a large one-time transfer. Nikunj Johri reports exclusively on what could come out of that committee report, which is likely sometime in the month of June. His story is source-based.
The panel set up to review RBI's economic capital framework may not recommend a large transfer from the RBI's existing reserves to the government. While the panel may suggest tweaking of some of the rules used to calculate RBI's surplus, this might not lead to a significant one-time transfer of the RBI reserves to the government. However, this could lead to an increased payout of the dividend that the RBI transfers to the government every year. However, the amount is not expected to be significant. The panel headed by former RBI Governor Mr. Bimal Jalan is expected to meet next on June 12 to finalize its findings and before it submits the report to the Reserve Bank of India. Most of the panel members, except Finance Secretary Mr. Subhash Chandra Garg, are of the view that there shouldn't be any significant relaxation in the formula that's used to calculate RBI's capital needs. Most of the panel members are of the view that market risk parameters that are used to judge potential risks from debt market and forex volatility can be slightly relaxed, but this should be done at the cost of tightening other parameters like judging potential credit risks. Over to you.
Nikunj, thanks so much for that. Bharti Airtel has notified its intention to list Airtel Africa on the London Stock Exchange. The filing has thrown up some fresh information that allows us to calculate the current valuation of the telecom operator. Samit Sarkar is standing by with the math. Samit.
So when the first funding was done in the Airtel Africa business back in October 2018, what the company said was close to 6 investors had invested close to $1.25 billion in the company. But that time they had revealed the name of only 4 investors, that is Warburg Pincus, Temasek, Singtel and the SoftBank Group. But the latest disclosure gives us the name of the 2 other investors. They were Bharti Mittal Family Group and Hero Group's Sunil Munjal. Now both these parties bought in close to 5.5% and 4.5% stake in Airtel's Africa business. As you can see here, Bharti Mittal Group got close to 5.5% stake, while Sunil Munjal got close to 4.4% stake. Now the total value at that time what they had invested for this stake was close to $450 million. Now they also given the details of how many shares were issued to this investor, so we could now calculate the per share value and the total equity value of Airtel Africa's business. So there were 2 rounds of funding, one in October 2018 and the second one in January 2019. Now both this funding were then at the same rate, that is $1.48 per share value. Now because of this $1.48 per share value, we can now get the total equity value of Airtel Africa, that is close to $4,600 million, and at a conversion rate of 70, this translates to close to 32,000 crore rupees.
Samit, does the filing also throw some light on the amount Airtel Africa looks to raise through its public offering?
Well, from the disclosure, we can firstly know that the entire offer will be a fresh issue, which means that none of the existing investors, including Bharti Airtel, will be selling their shares in this issue. Now, the entire fund that will be raised from this issue of new shares will be used to repay the debt of Airtel Africa and not of Bharti Airtel's standalone business. Now, they did not declare exactly how much they want to raise, but they said that they want to keep a minimum free float of 25%, and if the demand turns out to be good, they will float in additional 15% of the offer depending on the demand. Now what this means is that if the company is offering close to 100 shares, that is 25%, if that is the case, and if the demand is good, then they will sell in additional 15 shares. That is what this additional 15% of the offer depending on the demand means. Now to understand this minimum free float of 25%, firstly let's see the definition of free float for the according to the London Stock Exchange listing guidelines. So according to them, shares which are owned by public are considered as free float, which obviously means that Bharti Airtel won't be coming in the free float list. Now along with that, there are some other clauses also in the London Stock Exchange listing guidelines which bars Warburg Pincus, Singtel and Sunil Mittal Family Group to qualify as a public shareholder in Airtel Africa. So to understand now which of the shares come under free float criteria and non-free float criteria, we will look at this slide. So under the non-free float criteria, close to 86.9% of the stake now comes in, which has to come down to 75% on listing, while this free float, which is currently 13.1%, has to increase to 25%, and for that the company will have to issue close to 488 million new shares. Now, which means at a price of $1.48 per share, this will translate into an equity dilution of close to 13.7% and a fund of close to 725 million. And if the company chooses to do the additional 15% offer, they will get in close to 108 million for that amount. Now obviously the actual amount of fundraising will be different from what this amount is, because this is based on the past calculations done by us, and the actual offer size will depend on how many shares the company wants to offload and at what price they want to offload. But this gives us a fair idea of what the minimum amount could be that the company will get from this issue.
And Samit, finally, what do potential investors get?
Well, the company also mentioned that they want to distribute at least 80% of the free cash flow that they generate in an annual year, which as long as that leverage ratio, that is net debt to EBITDA, remains in the range of 2 to 2.5 times. Now currently, if you see, Airtel Africa's total debt is close to $4,000 million, which translates into a leverage ratio of close to 3.01 times. Now if they do a issue of $725 million, the leverage will come below 2.5 times and it will be close to 2.46, and if they take in that additional 15% offer, then the leverage ratio will come down to close to 2.38, which means that the company will be able to meet that 80% distribution guideline that they have mentioned here, which also means that for Bharti Airtel, there will be free cash flow coming in post this listing from Airtel Africa business.
All right, Swami, thanks so much for that. Let's move on. Reliance Capital has been in the headlines for two reasons, either for liquidity concerns popping up from time to time, or for selling some of their units. The Anil Ambani Group company that has been grappling with massive debt is set to lose almost 80% of the business within Reliance Capital. Sajit Manga joins us with the details. Sajit.
That's right, Ira. If you look at Reliance Capital, it has a standalone debt of nearly 18,000 crores at the end of March 2019 and a consolidated debt of 42,000 crores. The company plans to reduce this standalone debt by roughly around 12,000 crores, and in that endeavor, it has already sold its stake in Reliance Asset Management, where it got nearly 6,000 odd crores. It's also in the process of selling stake in various media entities, which they have already started with the radio business, getting them nearly 1,200 crores. Over and above that, there has been a couple of more monetization which is on the pipeline, which includes housing, home finance business and the commercial finance business. The company has already stated that these two businesses, they would like to sell it off to a strategic investor and retain a financial stake in these two companies. And in the general insurance business, they wanted to either go for an IPO or get a strategic investor in the company, whereby they bring down the stake. If you look at the consolidated numbers of Reliance Capital, you'll find that nearly 25% of its net profits used to come from Reliance Nippon Asset Management, and that too because it's though it doesn't contribute much to the top line because it's an associate, it comes as a minority share to the Reliance Capital consolidated number. But others like general insurance, commercial finance and home finance have a significant contribution to the profits. Together they would be roughly around 80% of this profits which will go off as part of the monetizing process which Reliance Capital is doing, and they will end up with only the insurance arms.
So Sajid, the debt goes down by how much if we assume that all of these exits actually happen? It goes down by a lower proportion than the profits do, right?
Yeah, so the debt would, for on a standalone basis, they're planning to reduce debt by 12,000 crores and a large portion of the debt is part of the home finance and the commercial finance business. The moment they offload more than 50% in these companies, on a consolidated basis, the debt, which is now at 42,000 odd crores, will come down drastically for Reliance Capital. And at the end of it, it will become a CIC, which is a core investment company, which has been Reliance Capital will be there, and it will be a holding company for its insurance businesses with large amount of revenues coming from general insurance and life insurance. A majority of the profits coming from general insurance because life insurance is not giving that much of profit, and going forward it has a health insurance business which it started off in December, so it has scaled that up, and new entries into AIF and PMS businesses.
All right, Sajid, thanks so much for that. News just coming in, we'll flag this off quickly. I think former Finance Minister Arun Jaitley has suggested on his Twitter handle that he is unlikely to put himself up for reappointment. I think this was fairly well understood in any case, given his health concerns. But he has, about 6 minutes back, put out a letter on his Twitter account which says that he has written to the Honorable Prime Minister. The letter says that during the last 18 months, I've had some serious health challenges. My doctors have enabled me to emerge out of most of them. After the campaign has concluded and you are leaving for Kedarnath, I had orally informed you that even though I may be able to discharge my responsibilities, I would in future for some time like to stay away from any responsibilities. This would enable me to concentrate on my treatment and health. I am writing to you to formally request that I should be allowed a reasonable time for myself, my treatment, my health, and therefore not be a part of any responsibility in the new government. So Arun Jaitley is not going to be getting the Finance Ministry portfolio, and then the big question thereon is who will. We don't have the answer to that second part. Let's move on. Boeing is confident that it can get the Boeing 737 MAX airplanes back in the air by July, says SpiceJet. The budget carrier, which is one of the biggest buyers of the aircraft, had to ground 8 aircraft in March following 2 crashes. PR Sanjay of Bloomberg News now joins us with more. Sanjay.
Like any Airbus operator, A320 is very critical to their fleet. Like a Boeing operator, a 737 MAX is very critical to the fleet. So after 2 fatal crashes, they have grounded, SpiceJet was forced to ground the 13 of such planes. And they have at least around 2005 737 MAX are on order. So it is very, very critical for SpiceJet's future. And now what we understand is, CFO and both CEO are, saying that it will be back by July. Of course, June to mid-October is a lean season, but if they get this plane, which can save at least 15 odd percentage of fuel, it will be great for the airline. But one will have to wait and watch what is FAA saying and what is European regulators saying. If FAA are insisting more training, then it might incur additional cost to SpiceJet and to any other MAX operator. So one will have to wait and watch how things pan out, how other regulators of Indonesia, Europe and US are responding to this thing, and they will be talking to Boeing, and Boeing will have to make necessary changes which may or may not incur additional training charges for airline operators.
Sanjay, thanks so much for that. Sun Pharma's profit halved in the fourth quarter, missing analyst estimates. The one-off adjustment made for the transfer of its distribution business in India weighed on the numbers. Yatin Mota is standing by with the fine print and what brokerages are making of it. Yatin.
Well, if you look at Sun Pharmaceuticals, clearly there was impact because of Aditya Medi sales and related transitions as far as the domestic business was concerned, which was down 40% on a year-on-year basis, and clearly that impacted the revenue growth as well as the profitability. In fact, if you look at the overall earnings also, we have seen the profits decline by nearly 52%, EBITDA down nearly 40%. Margins also have contracted by nearly 10 percentage points on a year-on-year basis because of the transition as well as slowdown in the global business. Now, if you look at the breakup, India sales were down 44% because of the transition related to the domestic distribution business. If you look at Taro, which is their important Israeli subsidiary, there also the revenue growth was a mere 3% year-on-year basis, which came in at $180 million. Rest of the world sales grew nearly 32% year-on-year. This is partly attributable to the consolidation of their Japanese unit, which is Pola Pharma. Now, brokerage is also not that gung-ho. If you look at UBS, they have cut the target price to a level of 500. UBS believes that they are expecting slower than expected the monetization of innovative pipeline, and also they foresee a valuation discount as far as Sun Pharma is concerned moving forward versus its peer group. Morgan Stanley also, on the other hand, maintains an underweight with a target price of 470. Morgan Stanley believes that the fourth quarter earnings were a miss, especially given the fact that the US specialty business is taking longer, road to profitability. And finally, Morgan Stanley also believes that FY20 will be a transitionary year as far as Sun Pharmaceuticals' global as well as domestic business is concerned. Of course, the silver lining, according to brokerages like CLSA, was the guidance, which was slightly better than the street expectations, and probably that is the reason why the stock is holding out on a better than expected guidance as well as growth pipeline moving forward.
Yatin, thanks so much for that. Broadcasters will be a happy lot this World Cup with advertisement rates touching new highs. Media buying agencies say prices are ranging anywhere between 15 to 16 lakhs for 10 seconds. And there are some matches like the India-Pakistan face-off which will command a higher premium. Charlene D'Souza has more. Charlene.
The television advertising rates for ICC Cricket World Cup 2019 have jumped to its highest, beating what Star India charged even for the latest IPL season. Now, the ad rates for an India match for a 10-second slot is going as high as 15 to 16 lakhs, said people from buying agencies on the conditions of anonymity. They've also said that the much-awaited India-Pakistan match, which is going to be played on the 16th of June, the 10-second slots will cost as much as rupees 20 lakhs. Now, that's the highest ever rate that is going to be charged for a cricket game. Now, in the latest IPL season, the highest ever that was ever charged was 10 to 12 lakhs for 10 seconds. Now, Star India has declined to comment on the advertising rates. Now, one of the main reasons these rates are at its highest is because it's being held in England and matches will be live telecasted 3:30 p.m. onwards, which will go on to prime time because they're 50-over matches compared to what the 2015 World Cup, which was held in Australia, where the matches started at around 3:30 and 6:30 a.m., making it not feasible for people to watch it at those hours in India. Now, India's largest largest sports and entertainment broadcaster, already has 24 advertisers on board, which includes PhonePe, Amazon Pay and Bearjuice, Uber and Coca-Cola. Now, this World Cup will not have group matches, and it will go back to the previous format of the round robin, which was played which was followed 27 years ago, which will ensure that all the big teams get to play against each other, and India will play more matches. Hence, the ad rates have also been higher. Then also the advertisers have opted to buy ad spaces in bulk, and then that package deal has gone for rupees 7 crores for 25 matches. Now, sources say that 80% of the inventory for India matches have already been sold out, and 70% of the non-India matches have also been sold out.
Charlene, thanks so much for that. Flipkart founder and former CEO Sachin Bansal has pumped in the lion's share of the latest round of funding for Ather Energy. Bansal has been one of the angel investors in the electric scooter maker. Here's Nishant Sharma with the details.
Well, right, Ira. So Sachin Bansal has infused close to about $32 million in a major funding boost to electric scooter manufacturer Ather Energy, as per the statement issued by the company. Now, this round values Ather Energy about close to $400 million, as per the person privy to the development. Now, Ather aims to use this investment basically to set up a manufacturing facility which can produce about 1 million vehicles a year, and also looking to expand its operation, beyond Bengaluru, which it started launching last year, to about 30 cities by 2023. Now, this is also not Bansal's first big ticket investment in his individual capacity in a mobility startup, as he's also eyeing aggressively, making a huge bet into the mobility space. Just earlier this year, Bansal invested about close to 650 crores in India's largest ride-hailing platform, Ola.
Nishant, thanks so much for that. That's a wrap on this edition of Parliament. Thanks for watching.